Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock with news that is generally going south. Global credit risks are rising as the triple threat of rate rises, Europe's energy crisis, and China's stuttering property markets and political changes all show no sign of easing. Good corporate profits can't mask any of these threats to credit markets. The early flash PMI result for the US paints a challenging picture for business conditions there. New order intakes were weak and their factory sector slipped unexpectedly into a minor contraction. But it is their giant services sector that is the main problem, shifting sharply lower into a real contraction. And while we were holidaying, Chinese President Xi Jinping sealed his bid for a president-breaking third term, while his top deputy and several other top officials got the boot and retired. In is a hardline group. There are no women again in this core group, and for the first time in 25 years, no woman in the wider Politburo. Also conspicuously missing are leaders with economic experience. Along with Premier Li, the central bank chief was another key economic official demoted. These are changes that have spooked investors. There is a rush by foreign investors to quit exposures to China now. The Hong Kong equity market was in full panic mode yesterday and ended down more than 6%. The Shanghai markets tumbled 2%. However, burnishing Xi's coronation, their official stats reported the Chinese economy rose 3.9% in the third quarter of 2022, exceeding the market consensus of 3.4% and picking up from a meagre 0.4% growth in the second quarter. But it improved even though retail sales rose just 2.5%, the least in 4 months, and export growth was at a 5-month low. Further, their jobless rate hit its highest since June at an official 5.5%, and prices for iron ore and copper are falling, mostly based on weaker prospects in the Chinese economy. And as widely expected, Japan's government and central bank intervened in the currency market over the weekend to support a falling yen. The yen soared the most against the US dollar since March 2020 on the intervention, rising 2.7% in just a few hours. It was an intervention timed for the final few hours of trading in the US on Friday, so it should hold things until today at least. It is estimated to have cost them $37 billion in those few hours. And tomorrow, Australia releases its September CPI data. It expects to rise 6.9% from 6.1% in August. But analysts like the CPA reckon it will be over 7%. At that level, the RBA may not be as sanguine about how they have handled monetary policy so far. And the US Treasury 10-year yield starts today little changed at 4.23%, but it is quite volatile. And the price of gold will open today at $1,650 an ounce. This is down $8 from this time yesterday. And oil prices start today down 50 US cents at just on 84.50 a barrel in the US, while the international Brent price is now just on 91.50 a barrel. And the Kiwi dollar will open today at 56.8 US cents and down 0.75 cents from this time yesterday. Against the Australian dollar, with little changed at 90.2 Australian cents. Against the euro, we're also down 0.75 cents at 57.6 euro cents. That all means our trade weighted index starts today at 67.5 and down 60 basis points from this time yesterday. Get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and that was 90 at 9 brought